Welcome everyone. In this session, we are going to learn about a candlestick pattern which is called shooting star. So, what basically is the shooting star? Shooting star candle pattern looks like this. So, what are the psychologies behind this? How we trade shooting star? What are the criteria it needs to be fulfilled as a shooting star? We will be discussing on those things. But one thing which you have to remember is a shooting star candlestick is a one in which it has a long wick and the second one short body like hammer, and meanwhile it should have made a no on so lower small wick. Without lower small wick we cannot consider it as a shooting star. There should be a small wick. As you can see here, it is a very small wick, so this is a shooting star. So what is the psychology behind shooting star? Let's try to understand it. As you can see, the market was in an uptrend moving upside, and at the top bulls lost their control. Bulls lost their control. What I mean to say is bulls tried to push the price higher, but at the same time they become weak and the bears pressurized the bulls and pushed the down further low, and finally the candle, which should have been closed like this in green color, closed like this in red color, which clearly means there was a rejection, and this rejection was due to domination of bears. So this was the psychology behind the shooting star pattern, which means bulls tried to push up but failed and closed the candle below its opening price. Let's say candle opened over here, made a high, but bears pressurizes it and took the price to further low level and closed it below its opening price. Thus a shooting star pattern is being formed. Thus a shooting star pattern is being formed. This is what the psychology behind the shooting star pattern is. Now let's look into the chart and see how we trade shooting star pattern. This is a Nifty 50 index, 15 minutes time frame. As you can see, market was in a clear uptrend. Bulls tried to push the price further upside but failed, and bears closed the price even below its opening price, and in result a shooting star pattern has been spotted. So now what we have to do is our strategy says we have to enter at the low of the candle, keeping stop loss just little bit above the high by giving some buffer, and our risk reward should be 1:1.5. So we will enter over here, our stop loss would be here, and our target will be this much. If this much is our risk, this should be our reward, 1:1.5. So somewhere over here our target would have been achieved. So this is how we have to trade shooting star candlestick pattern. So what are the golden rules and criteria for shooting star pattern? First criteria is previous uptrend. Second criteria is long rejection week at the top of candle. Third criteria is short body with small lower wick. If these three criteria are fulfilled, then only we are going to trade it as a shooting star pattern. And as you can clearly see, all three criteria are getting fulfilled over here. See, previous uptrend, first golden rule fulfilled. Long rejection week, second golden rule fulfilled. Short body with small lower wick, short body and small lower wick. Third criteria fulfilled. So we will be trading it as a shooting star candlestick pattern. This is how we have to trade shooting star. Let's see some more examples. Again, Nifty 50 15 minutes time frame. Market was in a clear uptrend, and then a long wick is spotted, short body is spotted, a small lower wick is spotted. So our golden criteria, our golden rules are fulfilled. Now what we have to do, we have to just enter at the low of this candle, keeping stop loss little bit higher than the high of candle by giving some buffer. If this much is our risk, 1.5 times will be our reward. So somewhere here in this candle our target would have been achieved. So this is how you have to trade shooting star pattern. This is how you have to trade shooting star pattern. Hindustan Unilever, 15 minutes time frame. See, market was in uptrend. Market moved from here till here. Market was in uptrend, and then long rejecting wick, rejection, short body with short small lower wick has been spotted. So now, as per our rule, as per our strategy, what we have to do is we will enter over here, we will keep our stop loss at the high, giving some buffer. If this much is our risk, then this will be our reward. So here we would have achieved 1:1.5 in this candle. This is how you have to trade using shooting star candlestick pattern by maintaining your risk to reward ratio of minimum 1:1.5. Let's look some more examples. Binance Industry, 15-minute time frame. Previous uptrend, long wick, short body, small lower wick. All three golden criteria fulfilled. Golden three rules were fulfilled. What we have to do? We will enter at the low, keeping our stop loss somewhere here, giving some buffer. If this much is our risk, This would have been our reward target. So somewhere here you would have achieved your target. This is how you have to trade shooting star. This is the way you have to respond whenever you spot a shooting star candlestick pattern. Eicher Motor 15 minutes time frame. See what happened here. As you can see, market was in a sideways direction. Market was in a sideways direction. No trend was there, neither uptrend nor downtrend. So a shooting star type of pattern has been spotted, but basically this is not a shooting star because lower wick is missing. This is inverted hammer type of pattern. But whenever you spot this type of pattern in this type of market, never trade, avoid it. Though it may have performed here, but 90% of the time it is going to fail. So never trade when you spot patterns in sideways market. Always remember. Now see, uptrend, long rejecting wick, short body, small lower wick, shooting star confirmed, uptrend, on 3 golden rules fulfilled. What we have to do? This is our entry, somewhere here our stop loss. If this much is our risk, then this much would be our target, 1.5 times. So as you can clearly see, our target would have been achieved in this candle. So this is how you have to trade a shooting star pattern. Let's see one more example. Hindustan Aeronautics Limited, 15 minutes time frame, clear uptrend, long rejecting wick, short body, small wick, shooting star pattern confirmed, entry, stop loss. If this much is our risk, this would have been our target, 1:1.5, and somewhere around here your target would have been achieved. So this was all about shooting star pattern, the psychology behind shooting star pattern, how shooting star pattern forms, what all things we have to consider before treating a candle as a shooting star, and how we have to make our entry, how we have to decide our stop loss, what should be our target, how much risk reward we have to follow. All this thing has been explained to you. Now you can trade actively using these patterns whatever have been taught to you till now. We will be seeing you in the next session with a new pattern, and we will be learning about all those patterns in the coming session. So till then, see you soon in the next class, and all the best for your trading career.